Hello, this is Victor Cuevas with Victor for Advice, and I'm filming another unscripted video. One of these days I'm actually going to write a script for a video, but it's not my way. And so we'll see how it happens. Bullet points is about the most I'll ever put down. But anyway, this is a great video. It's going to be a very, very important video for people who are self-employed or small business owners, and even for individuals. But I'm concentrating on self-employed and small business owners because I have found out over the years that so many of them just don't do a retirement plan. Everything goes into the business, their cash flow and things like that, their plans for the future. Grow the business. Hopefully it'll have something to sell in the future. But it doesn't always work out that way. And I want to encourage everybody that is self-employed or owns a small business to save for retirement. But I'm going to show you the smartest way, in my opinion, to save for retirement. I've been in the financial services business for 24 years. I used to have all kinds of securities license. I used to charge a fee for my services, all that. What I've learned over the years is what I'm going to teach you right now. And if you look at this with an open mind and, hey, with common sense, that's the way I like to approach everything, with common sense. It's going to make a lot of sense to you. And hopefully you'll contact me and want to move forward, or at least investigate this further. But let's go into types of retirement plans that are typical for a self-employed person or someone that has a small business. So I'm going to make a T here. I'm going to put the conventional on the left, and over on the right I'm going to give you the incredible alternative. So I'm going to put here, let's see, retirement plans, if I can write here. And I'm going to put self-employed, which would include small business owners as well. Now, there are three main ones. Now, there's other ones, but what you'll see more than often are these three right here. You'll see a SEP plan, which is simplified employee plan. There's employee pension. There is a simple IRA, and then there is the solo 401k. Yes, if you're a business owner, you can have a solo 401k, and later on, if you do, if you hire employees, you can expand it and include other employees. But when you're looking at these different retirement plans, you have to look at their character. What is it about them that is good or bad, or what is it about them that can help you in the future in retirement? Well, obviously, most people think, hey, if I'm going to have a retirement plan, it's for retirement someday. And of course, your accountant, and we know that for business owners and self-employed people, the big thing is, how can I save on taxes? I want to keep as much money as I make, and I want to pay as little tax as I possibly can, all legally. But that's your CPA's job, is to show you how to maximize your income and pay as little taxes as possible. And one of the things they say is, hey, why don't you put money away for retirement, and whatever you put in, you can save taxes on that amount. It won't count as income. That's conventional thinking, not the smartest way to do things. So, what are some characteristics of these plans? Well, they come with strict guidelines. They're strict guidelines. Since they're considered qualified plans, highly regulated by the federal government. And there's a lot of do's and don'ts with those plans, especially if you bring on employees. And if you get it wrong, it can come back to bite you. So they're not very flexible. They're strict guidelines. Another thing is there's penalties early withdrawal. So here you are saving this money, you're putting money away every month or every quarter or every year, however you do it, and you need the money for whatever reason. And to access it, you're going to have to pay some penalties. So again, not very flexible. One advantage is that the contributions are tax deductible. Contributions are tax deductible. This is where your CPA says, hey, look, you put $10,000 away that year, you don't pay taxes on $10,000. What's that going to save you? A couple of $1,000? Is that really a great benefit? You spend 20 years putting away $10,000 a year. You save $2,000 a year. You've contributed $200. You save $40,000 in taxes. Your $200 grows to $400,000. How much tax are you going to pay on that $400,000 in retirement? A whole lot more than the $40,000 you saved while you were contributing to it. And you'll be less inclined to pay taxes in retirement. And then when you die and you leave that, whatever's left is going to be taxable to your heirs. So whose retirement are you really funding, yours or Uncle Sam's? I'm going to show you a better way to do things. Remember, I just mentioned it. It's taxed in retirement. Not great. Don't want to be taxed. Wouldn't we like to retire with no taxes? That'd be great. And then there's another thing you got to consider. I'm just going to hope you can see that. Required minimum distributions, RMDs. Once you hit 70 and a half, you will be forced to draw income at a retirement account, even if you don't want to. You may still be working. You don't want to take money out of that. You've got to. And if you don't take money out according to the IRS schedule, you'll be penalized 50%. Not a good thing to have happen to your money. So these are just some of the characteristics. This is not all inclusive, but these are some of the major bullet points. So you have retirement plans for the self-employed, a simplified employee pension plan, a SEP, a simple IRA, a solo 401k. And some of the characteristics of those plans, there are strict guidelines, penalties for early withdrawal. Contributions are tax deductible, that's a plus, but the income is taxed in retirement, and there are required minimum distributions once you get to a certain age. Now, I'm going to show you an alternative. I agree that it's far superior than what I just showed you, but that's going to be up to you. When I go over this, I want you just to have an open mind and use your common sense. That's it, just common sense. That's all you need. And I think you'll, or at least many of you, will start to agree with me on why what I'm going to show you is more superior. Now, it's called IBC, the infinite banking concept. I write it here in small letters, infinite banking concept. Now, if you see my profile on LinkedIn or you see my website, you will learn very quickly that my main emphasis in what I do, other than personal pension plans and a couple other things, is the infinite banking concept. And it's because it can help everyone in ways that you just can't imagine. That's why they call it infinite banking, because it's the ideas are infinite in how you can use it. But let's look at the characteristics of the infinite banking concept. First of all, you have after-tax contributions. Now, if you put $10,000 a year into the infinite banking concept, you will not get a tax break. It's coming out of your income, $10,000, you're not going to get any deductions on that $10,000 going in. However, in retirement, for the rest of your life, as long as you live, guaranteed you will receive a tax-free income. To me, that is far superior. And you will save many, many, many times more in taxes in retirement with an infinite banking concept than you would have saved during your working years contributing to a SEP or a Simple or a 401k. I mean, if you just use your common sense, why would you say, okay, I love saving $40,000 over 20 years, but now it's going to cost me about the $150,000 in retirement minimum in taxes. Does that make sense to you? Use your common sense. It doesn't make sense to me. Save $40,000, pay $150 later on or more. How about pay the $40,000 in taxes and save $150,000 in taxes in retirement? No brainer. Now, another thing, no limits. On contributions. That goes to the strict guidelines here, how much you can put in a year. And if you have employees with these qualified plans, it really starts to get complicated. It's what you can put in, and it all depends on what the employees can put in and things like that. So who needs the hassle for yourself? Okay, so there's no limits. I mean, if you want to put $1 million a year, you can do it. I mean, there's that famous coach, Michigan, I think Harbaugh, who part of his contract is they're putting in $2 million a year into his plan. He's not a fool. Here's another very important aspect. Access to your money anytime. No restrictions. Pretty nice. So you're putting the money in. You're putting in $10,000 every year. If you need it, get it. It's yours. And if you do it in the most efficient way, man, it's powerful. It's powerful. So far, use your common sense, looking pretty good. Now, another aspect, put some bullet points here. Create your own bank. Now, you know and I know that when you're self-employed or you own a business, funding is extremely important. Extremely important. So, what happens when you need a loan? What happens when you need a cash advance? You got to jump through the hoops. and it can be a hassle. But with the infinite banking concept, folks, you can actually create your own bank that you can access anytime you want, that you can repay whatever you borrow from it on your terms. Even never repay it, that's the case. You want to pay it off monthly, quarterly, semi-annually, annually. You want to pay it off, make a payment every 2 years. You want to borrow the money to start a project that won't be finished and pay you out for 18 months, and then you want to pay back the loan. It's okay. You dictate the terms. You borrow and pay back on your terms. Common sense again. What sounds better? You can't do that with a qualified plan. Okay, you're putting money away and you can't access it without penalty. You can't. So, now I'm gonna give you a bullet point here that's so very important. Safe, private harbor for your cash. In other words, folks, any excess cash you have, any excess cash flow, money you receive from a sale of some assets, whatever, you can just drop it right into that infinite banking policy. Once it's in there, it's private. No one can search it. I mean, you could have $2 million in that in this program, and no one would even know it. It's private. That's huge. Even if you have children going to college and you're filling out those FAFSA forms, most of the time you won't be asked about this asset. So they'll never know that you've got $500,000, $100,000, $1 million in there. And that's favorable for your child getting funding for college. And you can use this for college funding as well. In fact, this is far, far superior to the 529 plan. We can have a separate discussion. I can show you easily far more superior than the 529 plan. Now, tax-free legacy. I hope I don't go too low below what the camera is showing. Tax-free legacy. All the money you put into this plan, you'll be able to leave that and so much more above that to your heirs tax-free. Now, if you have one of these plans, and let's suppose you do very well, and you're throwing money in there like crazy, and you've got $800,000 in there, and you're 65 years old and you die, that $800,000 is going to be taxed to your heirs. You don't have a spouse, that $800,000 goes to your heirs. Man, it's a huge amount of money. Then it's going to get hit hard by taxes. Could be as much as 40%. How would you like to leave far more than that to your heirs? Goose egg on the tax. Go straight to them. Avoids probate. Folks, I'm asking you to use your common sense. Just common sense, that's all you got to use to understand this. And I'm going to give you a couple more here that are just going to really make this irresistible for you. Stay out of debt for life. Using the infinite banking concept, you never have to go anywhere else for debt. it can get to that point. Or where practically all your lending and borrowing needs are taken care of with the infinite banking concept. It's like living debt-free. It's like paying everything for cash, because when you borrow against this, you're borrowing against your own assets. You could take the money out of your program here, pay off whatever you want, pay for whatever you want, but you don't want to do that because that wouldn't be smart. You borrow against your assets. Your assets stay in the plan unhindered, continue to grow and grow and grow every year, guaranteed, nice rate of return. And you get to your retirement years, you've borrowed against your plan, you've funded all kinds of things, all your working years, and now you've got tons and tons of cash sitting in this plan. Pay you a lifetime of retirement, tax-free. Staying out of debt, it's huge. And when you pay back the interest of your plan, it's actually profitable for you. Hey, you gotta call me to find out the details because it's awesome. And probably could be the most important aspect of it. I hope you can see this. Tax-free income for life. One of these days, you may want to stop working. Or at least start working on your terms, really cut back, do what you want to do, make some money. But you don't have to worry so much about the income because your infinite banking concept program is going to pay you a nice income for the rest of your life. Guaranteed, don't worry about it. It's going to be there. You can't lose it. Folks, has your common sense kicked in yet? You've got the traditional way of doing things, the way your accountant wants you to do things. Tax deduction up front, yeah. Reduce your taxes. Don't go there. Not worth it, because it's going to cost you big time in the future. But what about during those working years, where there's no limits of what you can put in, where you can access your money anytime you need it, where you can create your own bank so you don't have to go begging anybody for funding or paying outrageous rates or having to do everything on their terms. Do it on your terms, where you can have a safe, private place to harbor your money, where you can never lose it, where it never goes down in value, just always goes up in value. Where you have a tax-free legacy, where all that money you've built up all your life, you can now leave it to your family, to your heirs, to your favorite college, to whoever. Tax-free. Tax-free. What a gift. Where you can stay out of debt to anyone else for the rest of your life. And where you can have that tax-free income for life. None of that can be accomplished on the left side. Can't do it. All of it can be done right here, using the infinite banking concept. So, I hope this has opened your eyes. This is what I have just shared with you is something your CPA is not ever going to share with you because he doesn't know about it. And there's a few CPAs that are licensed in what I do. Very, very few. Your certified financial advisor, your stockbroker, your fee-only advisor, neither one of those guys would dare tell you about this. Could jeopardize their whole business model. And I've filmed a whole video just on that. Now you have to come to someone like me that knows this concept. I've been school trained in this concept, graduated from the Infinite Banking Concept Institute, and I can help you implement this in your life. At the very least, let's talk about it. Let's talk about it, get more details, and see how it could work for you. Run an illustration, see how it could work for you. You owe it to yourself, you owe it to your business, you owe it to your future, hey, you owe it to your family to learn about this. And I'll tell you what, if it happens like it happened with me and the light turns on, you'll go, oh my goodness. This is the ultimate way to run your financial life. Everyone should have this as their financial foundation. And so many of our financial problems that are devastating our society would just disappear if people learned this and applied it to their lives. So, this is Victor Cuevas with Victor for Advice. I hope this video has been informative, and I challenge you to call me, contact me today as soon as you finish watching this video and ponder what I've shown you here. Let's get together and talk more about the infinite banking concept. God bless.